Okay, guys, good morning. This is the ARMR Report morning meeting. I'm your host, Brett Rosenthal. This is a live trading desk. This is all about stock market investing, both from a day trading standpoint and from a multi-day investing long-term standpoint. We cover the whole thing. And so the morning meetings that I do are designed to just get your mind right on both of those levels. We're going to discuss what we can do on a day trading level, what we're looking for here on our trading desk, and then what we're looking for from a multi-day investment level where we're building positions and investing in different themes and stocks. So without further ado, let me just remind you, this is information coming directly off our trading desk. This is information I'm using for my own personal capital and that of individuals that we manage money for. And all of the business is run through Interactive Brokers. So we have 3 model portfolios. You can find them on our website, rosenthalcapital.com, and it shows you how we're invested right now. And you'll see on that site, conservative, balanced, and aggressive portfolios across the board. We are heavily cash. We are long precious metals. And we're not doing anything else. That's from an investing standpoint. So nothing has changed yet on the investing level. The market's gone up 10 days in a row. All of a sudden, nobody thinks the market can go down. It's the exact opposite of what December was. But we don't feel that way. We have algorithms we've written for the top 5 indexes, the S&P, the Dow, the NASDAQ 100, the small cap index, and the momentum index, all of which are keeping us in cash. There was a short-term trade here in small caps that we could have positioned if you wanted to be aggressive. And I'm just going to share my screen with you so you can see what I'm talking about. See how these algorithms work. Okay, so you're looking at a screen of small cap index. Every tick is 60 minutes. So this is a 60-minute chart. I'm going to blow it up for you. You could see in the bottom right part of the screen the caret that would get us long the market. I'm going to just highlight it for you here. Okay. So this is the box we're trading in. Okay. So for very aggressive accounts, you can see there's a buy caret right down here, which is the date of the 28th of December. And the market is running straight back up to the targeted primary exit of this trade, which would be basically the 50-day moving average, 144.77. Okay, the red line is the downtrend line. So what we're really looking at here on all of these indexes is that the market, and I'm going to flip through here. Here's the Dow, not even close to its downtrend. The Qs, like the small caps, are a little bit above the downtrend, but below the 50-day. And the S&P is not at its downtrend and still below the 50-day. So all the indexes are below the 50-day, okay? And so that gives you an idea of where we stand when it comes to our longer-term investing picture. We are in a downtrend. We blew out the bottom of that trend in December in the midst of tax loss selling hysteria. We're now overshooting to the top of that trend for the small caps and the NASDAQ 100, but not even close to the top of the trend yet for the Dow and the S&P. So the market really hasn't gone anywhere. Nothing's really changed. We have a downtrend that's in place since September. And so we're looking at this opportunity now on the rally back to the trend to set up shorts from an investment standpoint, not just a day trade, but investment shorts. And we'll do that on all 3 of our portfolios, something we don't normally do. And I don't recommend it for most people, okay? Short selling is a very difficult task. You're always behind the 8 ball since the market goes up most of the time, right? 80% of the time the market goes up. So short selling is not for the faint of heart. It's not something I do very often. I'd much rather just hold cash. But there are some times where the setup is so ideal and the reward for the risk we're taking is worth it that we'll put some shorts out. And of course, we'll do it on a kind of we haven't decided yet. We may not put it in our conservative portfolios. We may just hold cash there. But if we do, it'll be on a staggered level, the smallest percentage in the conservatives and then a bigger percentage in the aggressive accounts. Okay, so that's where we stand right now. Nothing's changed. News of the day, that's important really is just the Fed news. And there seems to be a lot of flip-flopping back and forth. None of the other news matters. It doesn't matter about a border wall. It doesn't matter about China trade talks. That's all a bunch of smoke and mirrors to confuse your investment approach. Don't let it happen. Focus on the Fed, which is very hard right now because the Fed keeps flip-flopping. Jerome Powell says one thing, then he says something else, then people get upset. Then a couple of other Fed mouthpieces come out and try to correct what he said. And so there's a lot of muddled information. The fact is, the Fed is reducing its balance sheet in 2019. Until that changes, that will weigh on the market because in essence, the market is experiencing a liquidity reduction. So until that changes, not just speaking, not just making some comments that goose the market, but until the Fed literally changes their stance and becomes more accommodative, you have to remember from an investing standpoint that will be in another difficult year like 2018. Is it a bear market? Is it a crash? I don't know. It depends on what the Fed does, what other things that happen. But at the very least, it will be another difficult market. You don't want to chase stocks. Work on your whiteboard, build your list, know what stocks you want to own, wait for weakness, buy the weakness. The number one group we're buying, that we're looking at, that we're focusing on are the marijuana stocks. You guys know this. You've been following me since August. We've been talking about it when Constellation Brands put $4 billion, another $4 billion into Canopy for a total of $5 billion investment. That was the dinner bell ringing. These stocks had a huge run. Then they crashed in December. This is typical. Now they're having a huge run the first 2 weeks of the new year. That's very important because generally speaking, the groups that have the biggest positive moves in the first couple of weeks of January tend to be the leaders all year long. And so what we want to do now is buy the weakness. We're not chasing them. I know today Telray, one of our favorite names, is up 20%. That's on a story that I think 79 million shares that are in a lockup from a VC investor. The VC has come out and said we're not going to offer any of those shares to the stock market. And so I think a bunch of short sellers are caught. They were thinking that the 6-month lockup was about to end and 75, I think it is, million shares were going to hit the market. And that's not the case. They're holding all of those shares. So that's goosed that stock. We also had a couple of analysts upgrading numbers on Canopy in the last couple of days. And that stock is up like 20% in a couple of days. That's great. Even if you've missed it right now, don't panic. That's just proving to you this space is the space you want to focus on. And there'll be opportunities to buy the weakness. And that's what we'll be doing here. And I'll tell you about it when we're doing it. Okay. Quick day trading thoughts, right? This has been working constantly and it will, statistically speaking, work for you all the time. Gap ups, we look to short. Gap downs, we look to long, right? Gap ups, we look for a setup to go short. Doesn't mean we short every day, but when we get the setup, we go short. We did this just yesterday. Market actually gapped down, right? And I told you on the call yesterday, gap down, look long. And at 10 o'clock, you had a reversal. The market ripped higher the rest of the day. Okay. So what we have now is a gap down. It's not a big gap down. It looks like, I don't know, maybe a 0.5%. It's not really big enough. So what I'm going to look for is the gap down and a sell-off takes us down. Usually I like to look for at least a 1% decline in the S&P. And then I start getting interested, really interested in the reversal trade. So we'll see if that happens. Last note, I am building a put position in the small cap index. I don't recommend this for you. I'm just telling you what I'm doing, okay? There is no signs that this bull market is, not bull market. There's no signs that the rally of 10 days is over. It's just that when we hit certain levels, I like to start sprinkling in a put position on my favorite put index, which is the small cap, since they get hit the hardest in the downtrend. And I'm just testing the waters. I want to see how it feels. And then when we get reversals, I like to add to it. If we don't get reversals, okay, I'll take it off. No harm, no foul. It's not a lot of money, just a little piece. I'm going out to February and I'm picking up the 140s. If the market goes higher and we hit the 50-day moving average, I'll add a little bit more and I'll be buying the 145 puts on IWM. Okay. So anyway, be safe out there today. Be careful. Look for your opportunities. If you're day trading, guys, don't day trade everything. Just because the words day trade doesn't mean you have to trade every day. Look for your pitch and only hit your pitch, and that's how you'll be successful in a day trading capacity. I don't recommend day trading for most people, and I don't do it all the time. But in a downtrend, in a market with a lot of volatility, the reward is big enough for the risk that we're taking. So let's end this morning meeting on our mantra. Before you click the button to buy, invest, short, whatever, ask yourself, will this put me on the right side of probabilities and statistics? And is the reward worth the risk I'm taking? That is the number one key to investing and trading. Am I on the right side of probabilities, and will the reward be worth the risk? If you can't say yes to both of those, then you probably shouldn't be making the trade. You definitely shouldn't be making the trade. You should step back and wait for a better setup so that you can say yes to both of those. I wish you guys the best of luck. I'll see you at noon.